Hi, Assalamualaikum and good day. So, today's topic is accounting concepts and equation under the module of introduction, accounting equation and accounting principle. So, my name is Dr. Amira binti Jamil. I'm a senior lecturer from Faculty of Entrepreneurship and Business, University Malaysia, Kelantan, and will be your instructor for this topic. Upon completion of this topic, you will be able to determine the basic accounting equation, show the effect of transaction on the accounting equation, and also will be able to state and explain the accounting principle. Resources owned by a business are known as assets. All assets that a business owns are supplied by the owner and external parties. Therefore, the relationship between the assets and equity that of the owner and the external party of a business can be expressed as follows. Assets equal to owner's equity plus liability. So that is the accounting equation. So what is assets? Assets are property owned by a business. So there are two types of assets, the non-current asset and also current asset. Non-current assets are assets acquired or bought not for resale but to be used in the operations of the business with useful life of more than 1 year. Non-current asset, it can be divided into three categories: tangible, intangible, and also for investment. The tangible non-current asset is the non-current asset that have a physical substance. For example, land, building, machinery, office equipment, furniture and fittings, and also motor vehicle. For intangible non-current asset, it has no physical substance. For example, the franchise, goodwill, patent and trademark. Whereas for investment is a sum of money placed in other companies or organization in the hope of earning more money in the form of returns or profit. And the next one is the current asset. Current assets are assets that are either cash or can be converted into cash within 1 year. These assets constantly change their form during accounting period. The example of current assets are inventory, account receivable, and also cash. The next is owner equity. It represents the owner supplied funds to the business for the acquisition of asset for the business. So the equation for owner equity is owner equity equals to capital plus profit or minus losses and also minus drawing. Profit will increase the capital of the business, therefore increasing the owner equity, whereas losses and drawing will reduce the capital of the business, therefore decreasing the owner equity. Drawing occur when the owner withdraw whatever asset of the business for personal use. So asset equal to owner equity plus liability. So what are liabilities? It is funds supplied by external parties to the business for the acquisition of asset. It is therefore the financial obligation of the business to external parties. It can be divided into two, non-current liabilities and current liabilities equals to the asset part. So non-current liabilities is the amount owned by the business that are not repaid within 1 year. For example, is the long-term loans, mortgage on premises, and also debentures. Or for current liabilities, it is amount owed by the business that are to be paid within 1 year. For example, the short-term loans, bank overdraft, creditors or account payable. Because every transaction will have double effects on the accounting equation. The effect might be an increase or decrease in asset, increase or decrease in liabilities, or increase or decrease in capital. So that's why we have to learn about the accounting equation. So in this table, it will show the example of the double effect of every transaction in the accounting equation. Okay, for example, in the first 20x3 January 1st, Amin started a business with 15,000 cash in hand. Therefore, the effect is increase in cash 15,000 and also increase in capital, as this is the amount of money contributed by the owner of the business. Therefore, the transaction will be debit cash 15,000 and credit capital 15,000. Noted that in the accounting equation, it is asset equal to owner equity and liability. Therefore, the increase and decrease will have the contra effect of debit and credit between assets, owner equity and liability. For January 2nd, the business deposited 14,000 of the cash into bank account. So the transaction will be credit in cash or decrease in cash 14,000 and goes into bank. Therefore, increase in bank 14,000. And then for January 3rd, they received 10,000 loan by check. Check, we assume it is through bank, so it will increase the amount in bank for 10,000 and then increase the amount of liability or loan for 10,000. In January 4, the purchase equipment was 2,000 by check. Therefore, purchase equipment will increase in equipment for 2,000, and also as the payment is through check, so it will decrease the amount in bank for 2,000. And for January 5th, Amin withdrew 500 from the bank for his personal use. So withdraw from bank will decrease the amount in bank for 500, and then this type of transaction is called drawing, and it will reduce the amount of owner equity or capital by 400. So now that we have learned about accounting equation that can be used to incorporate bookkeeping and also for preparation of financial statement. So this process require adherence to the qualitative characteristic of financial information, accounting assumption and accounting concept to ensure the objectivity and that everyone agrees with the treatment of information. So we have 8 basic accounting concept according to the MASB, which is the Malaysian Accounting Standard Board. So the first one is economic entity. This concept assumes that a business is separate and distinct from the owner and from every other owner. The second one is going concern. Going concern is a concept that assumes a business is going concern that will continue to operate in the foreseeable future. And then the third one is monetary or money measurement, that assume the purchasing power of the unit of measurement used in accounting. The ringgit, as in the case of Malaysia, does not change. So in every report or every financial statement that is being prepared should use ringgit Malaysia as the monetary or money measurement. And the fourth one is periodicity. That is the assumption that the economic activity of a business can be divided into regular time periods, which can be monthly, quarterly, 3 months, and then yearly, meaning that every year lah. Okay, next concept is a cost concept that require asset and services plus any resulting liabilities to be taken into the accounting record at cost. Okay, and then the next one is accrual concept, which is the expenses must be recorded in the accounting period in which they are incurred. Similarly, income must be recorded in the accounting period in which it is earned. So that's why in the next module we will learn about the accruals and also prepayment. The next concept is consistency. That is the concept deal with the consistent use of accounting basis or method. For example, in the depreciation, if you are using straight line method instead of the reducing balance method, it should be consistent throughout the year. And then for the next one is materiality, which is a transaction is considered to be material if it is significantly affect the reported net income of the business. So in accounting, we choose not to disclose the immaterial transaction or the transaction that is not in the significant amount.